Hey everyone, welcome back to the channel where we dive into the future of tech, finance, and how it's changing our world. Today we're talking about something that's quietly revolutionizing everything: the death of cash. That's right, those bills and coins in your wallet, they're on life support. But as money goes fully digital, who really wins? Governments, big tech, or are everyday people like you and me getting left behind? Stick around as we break it down, backed by insights from the IMF, BIS, and more. For centuries, money was something you could touch. Metal coins, paper bills, stuff you stuffed in your pocket. But now it's turning into bytes on a screen, something you access with a tap or a swipe. This isn't just a tech upgrade. It's reshaping how governments, banks, and all of us handle value. The International Monetary Fund says cash use is dropping in most economies, thanks to younger folks loving digital payments while older generations stick with the green stuff. Over time, as demographics shift, cash is losing its throne. Between 2012 and 2019, in 24 out of 25 countries studied by the IMF, people used less cash compared to cards and e-money. We're heading towards a cashless world, but the big question is, who benefits and who's getting squeezed out? This isn't happening by accident. It's fueled by efficiency, tech, and rules from the top. The Bank for International Settlements points out that countries with cutting-edge tech are leading the charge on Central Bank Digital Currencies, or CBDCs. These are basically government-issued digital bucks, either for everyday folks like digital cash or for big bank-to-bank deals. The goal? Secure money without the hassle of printing and hauling paper around. Tech readiness is key. Places with killer mobile networks, fast internet, and innovative payment systems are piloting CBDCs like pros. In advanced economies, it's about modernizing and keeping control in a world full of fintech apps. In emerging markets, it's a game changer for financial inclusion, getting unbanked people into the system and boosting stability. Higher mobile use and bigger informal economies speed this up because governments see CBDCs as tools for transparency and innovation. Then there's regulation pushing things along. Governments are cracking down on big cash deals to fight money laundering and tax dodges. Spain limits cash payments to 1,000 euros. India yanked high-value notes. Moves like this make digital the go-to for legit business, shrinking cash's playground. If anyone's popping champagne, it's the policymakers. Digital money gives them efficiency and serious control. The European Central Bank warns that as cash fades, they could lose out on seigniorage. That's the profit from issuing currency. But a smart CBDC could bring it back, plus make monetary policies sharper, like interest on digital cash or direct stimulus drops to your wallet. The real power play? It's transparency. Digital transactions leave trails, so tax folks can spot evasion in real time and governments can track money flows like never before. This could lead to smarter policies, but it sparks privacy worries. That data could turn into surveillance if not handled right. Central banks are walking a tightrope, making digital money programmable but still trustworthy, like old-school cash. Plus, CBDCs are a shield against private cryptos. Remember Facebook's Libra flop in 2019? That lit a fire under central banks to innovate and keep sovereignty over payment, avoiding a fragmented money mess. Banks are in a weird spot. They're players, but could lose big. If we all hold digital money straight from the central bank, deposits might flee traditional banks, hurting their lending game. To fix this, most are testing two-layer setups. Banks distribute CBDCs, but the government backs them. It's a hybrid that keeps private efficiency with public security. For fintech and big tech, jackpot. Digital wallets and processors rake in fees and data gold. Over 2/3 of adults worldwide already use digital payment, especially in developing spots. Money becomes data, fueling ads and loans. But watch out for monopolies. If a few platforms dominate, one glitch could crash everything. Remember the 2024 CrowdStrike outage? It froze payments globally. Cash, it works offline, no matter what. In our rush to ditch it, we're forgetting it's the ultimate backup. It all sounds convenient, but it's not all sunshine. ATMs worldwide dropped 13% over the last 2 years. For older, low-income or rural folks, this means exclusion. In the Eurozone, 13.5 million are still unbanked. People with disabilities or low-tech skills rely on cash for control and security. Studies show we spend less with cash because it's tangible. Digital makes overspending too easy. Privacy takes a hit too. Cash is anonymous. Digital leaves footprints. Even privacy-focused CBDCs won't be fully untraceable, risking data breaches and exposed habits. It's a trade-off, ease versus freedom. Sweden's near cashless life raised alarms. They're now telling people to stash some bills for emergencies like cyber attacks. Don't expect cash to vanish overnight. It's more like getting sidelined. The IMF says usage is stabilizing at low levels in some places, with cash hanging on as a safe store of value. It'll coexist with digital layers. Physical for security, digital for speed, programmable for precision. In the end, winners are those controlling the pipe. Central banks building trust, firms handling data ethically, and people who adapt without losing independence. But if this amps up inequality or spying, the convenience might cost our freedom. What do you think? Ready for a cashless world? Or holding on to your bills? Drop your thoughts in the comments. Thank you so much for watching. If this got you thinking, please do like and subscribe and turn on notifications for more on the future of money. Share this with a friend who's still Team Cash, and see you next time.